This video is about the AOL, the areas of liquidity. We're going to talk about how the market makers, they love stop loss hunting. Okay, we're going to talk about these things and how to identify them, how to find them, and how we can trade them. Okay, so what I'm going to do is I got Dow Jones in front of me. I'm going to do this with the Dow Jones where I'm going to show you guys how I identify AOLs, areas of liquidity, and we're gonna see what happens. We're gonna see if the market makers will take out this areas of liquidity. We're gonna talk about how the best way to trade it, and we're gonna start now. I got this replay. You can replay it, right? So it's gonna go. You guys should know how to replay work. Once I press play, the price action is gonna go. I got it to go pretty slow, so that we can watch it and watch it unfold. Okay, so off rip, what do we do? Well, when we want to identify areas of liquidity, we can find them based on peak highs, peak lows, like this one right here. Or we can also find them on trend lines, like this one right here, right? Find them on trend lines, and you can see, boom, price took out the area of liquidity right there. Got a connection there. Test. Look at that. Bounce right below the trend line before it's going up a little higher. Okay, that's a good example. All right, but let's do another one. Okay, so right there, another way besides peak highs and peak lows, we can also see highs and lows that have equal highs and lows, like double bottoms, double tops, stuff like that. Okay, so right here, you can see we had a double top. All right, so it is possible that's just under this zone right here. It's gonna be some good money. All right, got a double bottom just under it. It's gonna be people seeing that level, and they're gonna think, hey, could get another bounce, because we're taught to buy or go long at support, right? So they're most likely gonna set their stop loss just below the level of where this double bottom is. Okay, where else can we possibly see an AOL right now? Okay, well, we got this high right here. Boom. All right. So around there is possibly a zone, an AOL zone, area of liquidity right there. Okay. Possibly a bunch of stops. If you're shorting, that's where we're taught to set our stops, just above the resistant levels. We're longing, that's where we're told to set our stops, just below the support level. Let's see what actually happens. What will market makers do? Okay, so I got this on play. There it is. Let me go a little faster maybe. There we go. It's playing out. A little faster. There it is. Boom. Okay, so you guys see that all these stops that was up here just got taken out. They are done. Boom, we'll take that out. All these stops got taken out. Okay, so now what? We still got liquidity down here. All this liquidity just got taken out thanks to this move. Okay, now where's the liquidity now? There are going to be traders out there, retail traders, that buy the breakout. There's going to be breakout traders, right? If they are a breakout trader, they see a breakout this level right here, where would they set their stop loss? Where would most of our fellow retail traders set their stop loss? If they're a breakout trader, they'll most likely set it just under where it broke out, right? Okay, so now we have liquidity down here, we have liquidity down here. What will the market makers do now? Boom! You see what just happened? Look at that. Look at that. Beautiful. Let me adjust this a little bit. Based on that high. Boom. Based on that high. It retested a couple times. It held, right? But look at this candle right here. Went just underneath it before bouncing, giving us the long wick. Took out the supports. Not the support. It took out the stop losses that's below the support before pushing upwards. Let's see what's going to happen now, okay? It's going. You guys see that? They'll take out the stops before they push it up, okay? Boom. We were adjust, right? Liquidity down there. Boom. Got taken out. Where's the high? Where's the peak high? Boom. That's liquidity up there. Let's see what happens. Boom. Took out the liquidity. That's out. Okay? You see what they do, guys? They create a new area of liquidity. There was a liquidity down here. If you was a breakout trader based on these levels, they would have set their stop losses down here. Got taken out. They take out the stop losses, and then boom, they make the real move. All right? Let's keep going. Look at that. Look at that. Any liquidity that was underneath this one. Remember, that's how we find liquidity, guys. We use peak highs and peak lows. Okay? Took that out before pushing up. Now, where's the liquidity at now? We got liquidity here. Right? Boom. And possibly liquidity up here. All right? What will market makers do now? Boom. Look at that. You see, you guys starting to catch the picture here? They will go take out the stop losses, right? Before they push it up. Now that they took out this stop loss is gone. That's all gone. We got new liquidity down here now. Right? There's still liquidity up here. Will they go get it? Boom! Oh my goodness. They taking out stops left and right. And look at this. Got equal highs. Definitely liquidity up here now. Gotta make this a little smaller. You guys starting to get this? This is what market makers do, guys. You know, they can't move. They can't just jump into the levels like we do. Right? They got to use these stop losses to disguise their entry. That's what they do. If they just enter the way market makers enter, they would, that's took it out. If they entered the way market makers do, they would really move the market like really, really fast. You know? If they entered the market the way retail traders do, I mean. Okay, so, all right. So remember, if you got the breakout traders, you got double top here, got the breakout. If you're a breakout trader, where would you set your stops? Boom. Most likely will set your stops down there for the breakout traders. Okay, we are seeing some selling pressure there. So that tells us some selling pressure up there. And if they short it down up there, their stop loss is mostly up there. Who's going to get hunted down first? What's going to happen? Boom! Okay? So, I'm just saying, the overall trend, we got a higher high here, higher low. For all I know is the overall trend could be more to the upside, okay? I don't know what's going to happen next. But we know the area of liquidity was down here. For the breakout traders, okay, because a lot of time us retail traders, we need confirmation. All those stops just got taken out. That's gone. And I'm going to take a guess. Now that those stops got taken out, it'll probably run up to take out the next stop up, all these stops up there. Let's see. It's working. Boom! Look at that. Interesting. This one is close. This high right here is closer to this high. So that's almost an equal high, which means there was more stops, even more stops up there. What the market makers do? They gapped it. So if you wake up in the morning and you see SPY gap, this is not SPY. This is Dow Jones. You see your Dow Jones gapped. What are you gonna do? What are all those traders gonna do? They are gonna cut their loss. All right. Let's see what happens next. Stops got taken out. Holy moly. All the stops got taken out. You guys see that? I can adjust this one right here to this high. Took that out. Right? Took out the area liquidity if it was up there. So now this high is now the support. Look at that. It washes just below it. Right? Take out the stops before pushing it higher. That is what they do. I'm giving you guys a good example. All right, we can keep on going here. Let's see. I'll move it up right here because there's a bunch of probably money up there now. All right, we're seeing some consolidation and some even support levels. Okay, so this area liquidity that was here based on this level, that's gone. Okay. Now, looking at this high right here, for all the breakout traders that was probably looking at this high, they probably have their stop loss just under there. Okay? And based on this high, there's probably a bunch of stop losses. There's definitely money just above there. And you also see it's chopping. Okay, even lows, right? So there's probably some money down there as well. Okay, so as of right now, there's a little more liquidity for the market to grab coming down, but there is liquidity for the market to grab going up. What will they do first? Take a guess. Oh, look at that. Double top, double top. So that's even more liquidity. Okay, that's even more liquidity. Does that make sense? It's even more money up there now. Bam! All of them just got taken out. All got taken out. All their stops got hit. They're gone. Boom. Look at that. Isn't that beautiful? Isn't that beautiful? Take out their stops on that first candle. All their stops got hit. Boom, boom, boom. And then this is a daily chart, guys. Remember. So on this day, May 5th, all the stops got taken out. And then what did they do? The very next day, they push it up. Okay? This is what they do. This is what they do. I love it. Boom. Look at that. Okay? There's liquidity up there. Alright? Now, this is a breakout. Breakout based on this trend line, which means there was money just under here. And look at that. They already took that out, all right? But we still have more liquidity down there. Was this taking out this liquidity enough for them to push it up higher? Let's see. Nope. Guess what? All these people who thought they were smart buying from this support, guess what? Gone. Stops got taken out. There's still more liquidity down here. Looks like they're safe. Are they safe? Oh, look at this. Pause. Got some equal lows about. Not really. All right. But this is a pivot low right here. Okay, we'll watch that. Okay. So we gotta watch out for this one. Got a pivot high right there. Right? So we got some liquidity up there. Are you guys starting to get this? Let's see what gets taken out first. They're out. This is out. Boom. Liquidity grab. Still got some more up here. Oops, sorry guys. Pause. Look at this. Double bottom based on this candle, the June 3rd and the June 11th candle. Just got taken out on this candle. Just something worth mentioning. Okay, double top up here. So that's something that I'll watch. Okay, look at this. All this based on this, all this liquidity that we had there based on this candle, gone, right? We could take that out. And look what they do. After they took out the liquidity, boom, they pushed it all back up. Even this one, look. This one, just below this line. So I would count that. Boom, liquidity grab, this is gone. Liquidity grab, that's gone. And look what they do. They push it back up. All right, so now where do we got liquidity at? Double top here. So there's money and there's money up here. Okay? And as of right now, we have money right here. We still have this line, a couple liquidity lines that we never got, especially this double bottom here. All right? So, okay, we'll keep on going. Just took out the liquidity for here. We got liquidity up here. Market makers just working their way up. As of right now, look at that. It's going. There's money up there. Up. It's testing that resistance, giving us the third almost equal high. So there's more money. Boom. Look at that. So after giving a double top, they gave us a third test of resistance. That means there's more money up there. More retail traders are looking at, oh, that's a strong resistance. We should short it. So that puts a lot more stop losses just above there. And look at that. All got taken out. All gone. Still got a little bit more up the top. What are we going to do next? Okay. Boom. My goodness. So you see, all the breakout traders got their stops taken out. And then they push back down low, because there's not just breakout traders, there's breakdown traders, right? So based on this trend line, they see that there's gonna get a false breakout right here, right? This candle right here. So if they play this false breakout, where would they have set their stop losses? They would have set it just above there. And look what market makers did. They hit that. Okay, reference this line. Stops got taken out. So this line, this candle closed back below that level, giving us a false breakout. Retail traders would have set their stop just above the level with the false breakout. Look at that. They hit it. They hit the money and they pushed it down lower. Okay, guys. So I think you guys get it at this point. Okay. So I'm going to cancel the replay. All right. This is what I have so far on Dow Jones. As far as areas liquidity. And look at this. When we first started, this is where I had the area of liquidity, okay? This is when we first started the video, this was the first one that I picked, this double bottom, okay? And we never saw it in the replay that Dow Jones hit it. However, it took a while because this was back in the early January 2021. And look what happened. Look what happened. I'll change the color so you guys to pink, all right? Look, this pink line, based on this double bottom, look what happened. There was big money down there, area liquidity down there, bunch of stop loss, and look what they did. They hit it. This was back in early June of this year, 2022. They hit it. They took out all the stops. Okay, you guys see with your own eyes. And look at that. They pushed it all the way up higher. Okay, guys, that's how we find areas of liquidity. Peak highs, right? We look for peak highs, double tops, triple tops, or even more. We can find liquidity on trend line. Like right now, my most recent one, I have this trend line from August 2022 high connects to August 26 high. We got the third touch of this line last week. That means just above it, there's an area of liquidity based on the trend line. I also have area of liquidity just below the September 6th candle. Why? Because it was a pivot low, a peak low. Does that make sense? So there's money just below there as well. That's why I put the dollar sign. So if the market maker's goal is to go down, they're most likely going to hit all these stop losses first before pushing it downwards to go grab more liquidity. That is what they do. So what's the best way to trade based off the AOL. The false breakout setups and the false breakdown setups will be your best friend. I promise you that. I have check this out right here. Perfect diagram image right here. Support levels, right? And under those support levels are clusters of stop losses. Market makers will stop them all out before pushing to the next move or making the real move that they want to make. Okay? So that's how I trade it. That's how I trade using the areas of liquidity. I identify where the areas of liquidity is, recognize, hey, there's a bunch of liquidity here that they could grab, but I'm not going to enter the trade unless I see a false breakout or a false breakdown setup. So for this example, if there's liquidity above this trend line here and market makers grab it, the breakout level is around 322. So if Dow Jones pops above 322, grabs all the liquidity, but then I see price pushing back below 322, that's a sign that the market makers were just grabbing liquidity and now they're most likely going to push it down. And I'm going to combine that idea with the false breakout setup. Very bearish. So that would, make me want to enter a put. They grabbed some liquidity, they took out a support, Does that make sense, guys? All right, so that's how I trade them. And another thing that you can do, right? When you trade when you learn to identify the AOLs, a lot of us are taught we're gonna enter from resistant, we short from resistant, or we go long, we long from support, right? But there's another way that you can enter. If you know how to identify the AOLs, instead of entering based on support and resistance levels, you can look to enter where you can identify where your fellow retail traders are setting up their stop losses. It's like you'll be entering the same way smart money is entering, okay? And smart money are a lot more profitable than us retail traders. Okay, guys, so I hope you guys understood that explanation. I hope you guys liked that explanation on what the AOL is, how to identify it. I showed you guys this morning in the beginning of the video that it's real. The market makers, they go stop loss hunting. Okay? So I showed you guys how to identify it as well. Okay? So next thing you guys got to do is try your best on how you can add it into your trading. How you can trade it in real time. Like I said, use the false breakdown, false breakout setups. Learn to identify where it is, but you must allow the price action to guide you. We're combining these smart money concepts with price action trading concepts.